morning. Welcome to my trading room. Got a little bit of a late start this morning. Stop run. Going back up to the orange line here. Spread this out a bit so you can see better. I've been trading in a range since Monday at midnight. Yesterday's opening range, 832. Been making higher lows. Kind of pushed up here. Bulls are going to want to try to break this out. Would love to bet on the failure, to be honest. I'm not sure. Not able to get a push up to get that entry. Come on. I'm not gonna short it, but I want to. Fudge. It's probably just gonna go. That was annoying. I was so close to pulling the trigger on that one, and I really just fucked it up. I can't believe I got shook out or scared about that. You know, it's like such fucking horse shit. Oh, man, it's annoying. Very sad. Very sad about it. All right. Let's stay focused. Welcome, viewers. We have FOMC minutes today in 4 hours. trying to break it out. We just can't yet. Looks like it's going to be fine for upside. Just need to pop through 24,688 area, which I'm sure will come. There he goes. Testing the breakout. Could have took that short twice, man. Something like a 755 target for this break. Usually done trading already for the day. This was my this wick right here would have been it. Really, it's upsetting, kind of. But it'll be all right. It's just kind of going into a bullish trend. I have to wait and see what happens. It's really a silly looking chart this morning. Big old wild swings up and down. Big push in the middle, and then a range, and then a reversal. It's just as equally as gnarly. Approaching target level, 50% of the range to the left on the 5-minute chart. You see this range right here. It's a 50% mark of it. Pushed up really high. This is going to be the first impulse. Crazily strong right now. Just reversing that short level, but they did take the guys here. See if we can get out. No? All right. Oh, fuck, man. Let's go, bitch. Stop it, break even. Come on. First load out. Come on. Go. Alright. Nice. Oh my gosh. Those tiny stops freak me the fuck out, man. I have got to stop doing that shit. Really, really do. What a day already. Yes. Good morning, Catherine. So I got a little bit more on the runner today, which is nice. 3, 4, 500 bucks. I think I'm going to, oh gosh, it's hard to say. We got one account that is now eligible for a payout. But I think the minimum is $50, and I'm $5 away from the minimum. So, you know, I was 60 points away from the threshold for payout, and then anything after that is what I can withdraw, and just hit my buffer, and I think I'm $5 away from the minimum payout. But from this point forward, anything I make, I take. It's a big moment. Isn't that interesting? It's the volume for AQ futures. $8.30 to 3. It's like no volume other than between 8:30 and 3. It's pretty interesting. Don't often look at volume. Thought it might be fun for the stream. Might look at setting up a volume profile or something. So I was thinking about taking a look at that. Point and figure. It's like the moving average is pretty useless on a volume chart for futures because there's so many periods with low volume that if once you hit 8:30, it's just like, yeah, you're above the normal volume. So it doesn't really tell us much. Almost every single 5-minute candle is above the average during the opening hours. So I was thinking that volume profile might be a little bit better because then we could actually like just see price over time volume instead of like just straight candle volume, which you know is cool and all, but like, okay, here's a green candle, right? Green volume bar. There's a green candle. A red volume bar. A red candle. It's just like silly. I'll do something special for the stream. Get it a little bit more something extra. Yes. That was an 85-point trade. Still, the max drawdown is still pretty good. It's not exactly a great risk reward there, but it's my 22nd win in a row. It's amazing. 22 wins in a row. Fucking insane. Like, how does that happen? Let's see. That's only, I think that's my personal best in all the years that I've been trading. This account, 17. Let's change to my most heavily trafficked account here. Running through some of my stats. It's my first fill here. From date October 23rd. So it looks like you're paid about $100 in commissions. 150. It's not too bad. You know, that's what I really appreciate about take profit traders, that their commissions are pretty reasonable. I've had looks like about 90% of my profit from this account is from the short side, as you might expect. That about $300 in long trades, profitable. Got a 1.35 profit factor, 52 total longs, with 82% flat profitable. Definitely making less money from the long side, just even per trade. You can immediately tell that. That 11 consecutive longs win and 18 consecutive shorts win. So there's been at least 4 longs in this 22 trade win streak. Traded about twice the volume from the short side. 90 contracts versus 160. I got 16 and a half points on that runner, so that's 4 and a half points more profit than I would have gotten if I didn't have the runner. So that's cool. Finally worked out. Consecutive winners. One time I had 10 consecutive losses on this. Wow. But I've had 12 win streak, a 17 win streak, and a 22 win streak. Not bad. And my trade, those got broken by half a point loss and a 1.25 point loss. Pretty whack. So, literally unbeatable this recently. From the history of the entire history of this account, which is it's coming up on a month now, I'm 89.75% profitable. That's 1/4 of a percentage point away from being 90% profitable. And I'm doing my best to keep those feelings of mastery at bay. They're not affecting me. It's going to be important to, not get too big of a head on my shoulders. But I've been trading really well. I got an edge that I've been honing, and it doesn't really probably make too much sense to somebody watching the 5-minute chart, but I've been doing pretty well with it. And I can't wait for the day where I start trusting my stops better. It really discipline mistake. And, in my defense, this morning when I moved my stops, I did not move them as far as I normally do. If I make that rule, break that rule. I'm just like very, very concerned about getting stop runned. And, I probably deserved it, to be honest, because this is a massive uptrend. And I was shorting it. And that's kind of what happens when you do that a lot. And that's where my edge exists, really. I know the places in these massive runs where you can peel off some profit, and sometimes it doesn't work out. I'm just looking at this insane bullish trend and knowing that I took another short and came out on top. I'm really starting to feel like, you've made it out this far, okay? You're 90% profitable. Don't fuck it up. Don't make those the one losses that you take, don't make those catastrophic. It's just as simple as that. It's like half the fucking time, no, 90% of the time, these work just great. And then the 10% of the time where you're too scared to leave your stop so close to price, those are the times where you just take a loss that you shouldn't have, or you take a loss that is way bigger than what you had planned on and what your accounts can handle. And when you're dealing with such tight margins on these 25Ks that I've been kind of gravitating towards, you could really, really fuck your day up, really fuck your month up with just one bit of anxiety, just one little anxious decision can make a 90% profitable trader collapse to his knees. And it's something that I am determined to solve about the psychology of trading. And it's hard, when you're 90% profitable, what you've been doing is working, your entries are good. The reason why you can't trust them is because, we just made $500 in less than a half an hour of work. I watched the charts last night, but that's because I was in the office and I was, working and, just being here. But, for the most part, after I'm done trading, I barely ever think about the market. I don't watch what happened overnight, I used to, but these days I don't do that. I just come in at 8:30, load up the charts, and be like, all right, what are we gonna do? This morning, all this crap might as well be just fucking Greek to me. I do not care. I just simply wait for a place where I think that I could snag off a decent scalp. So the getting comfortable with your edge, and it becomes even harder, because back in the day, I was 24/7 on these charts, trying to decode price action at 2 in the morning when the candle takes 20 minutes to fucking print or longer. And then, during open, it takes there's 3 candles per minute or second sometimes. That's the kind of chart I watch. So maybe I can make money at 2 in the morning. Maybe I can make money at 3 in the morning. So you're just constantly trying stuff and looking at it and consuming the data, because it never stops. And then once you get to a point where you feel like you have an edge and you start pulling the trigger, you're making a bunch of money in a half an hour, and then you got to go do other stuff. And then, you don't get that level of familiarity or comfortability with it. And I'm hoping that it's gonna come with time. I am on a 22 win streak right now. I'm 90% profitable on this account. I am 90% profitable. 90% of the trades that I took on this account have been in profit. I'm not talking about 50% of the time. If your risk reward is great, if you're 50%, you're profitable. No, I'm not talking about that kind of life. I'm not talking about a 60% trader. I'm not talking about a 70% trader. I'm not talking about an 80% trader. I'm talking about winning 90% of the fucking time. Shouldn't that, shouldn't you be able to say, okay, I have mitigated 90% of the risk by the work that I put into this? Shouldn't you be able to tell yourself that you have to be okay with the 10%? Are you that much of a winner that you can't take 10% of the time losing? I'm annoyed by it, because I have to get that through my thick skull. Because that could have easily turned into a $600 loss, and then in a second, it could have took $600 from me, easy, instead of the 120 that I risk. Per account, mind you. So it's 120 times 3. But a super annoying problem that I feel like is the last step. It really is the last bastion of figuring this out. And the more I win, the better it'll feel. The more comfortable I'll have to be when I'm in a position. Because it's pretty wild. Where my edge exists, the market kind of goes crazy for a second. Like the market's just like steadily going up, and then it gets to the point where I'm like, okay, I should be seeing a reaction here. Sure enough, it happens. Reverses a little bit, all right, and it goes back up to test it, and that's kind of where my entries usually are. And it gets to that level, and then you can see the candles freaking out, like little teeny tiny ones right on your entry, right after you enter, and it's all like and you get this green, red, green, red, green, red over and over again, and a little teeny tiny doji. And then sometimes it goes against you a little bit, but most of the time it goes in your favor eventually. But it's those few seconds. It's just a few seconds of just like complete anarchy on the candle. And, what's running through your mind is that, like, oh, my stop is 12 points away. It looks like there's a lot of energy in this candle. It's like building up for something. It's like just these little quarter point moves back and forth over and over and over again for like 5, 6, 10 seconds sometimes. And it's that feeling of sitting in that, having entered and still being at risk. It just leaves you hanging. And that my first reaction is like, gotta move my stop. Well, thankfully, my entries keep me out of a lot of trouble, certain doom. And I'm very grateful for all that work that I put in to entering well. But I have got to get a handle on these rule breakings. And I follow 80% of my rules, except the 20% of the ones that can completely fuck you. You know, like, it's easy to only trade between 8:30 and 2. Check. Done. Get here I got here at 8:32 and opened up my charts at 8:35 and my stream at 8:35. And then I was profitable for the day by 8:45 or whatever the fuck it was. Easy. That's not even a rule. Use correct stop size. Easy. It's automatic. When I hit buy, when I hit sell, it shows up. Follow the exit strategy. When I'm in profit, I don't give a fuck how I exit, but it automatically handles it. I have my schemes built into my Sierra Charts order configuration, and as soon as I hit buy and sell, my exit orders are on the screen, and my stops are ready to go to break even and trail my profit. I don't have to touch a single thing. The only thing I do is move my runner take profit down farther to whatever makes sense, to see if I can catch a nice swing. Max position size. Easy. I know that if I over leverage myself, that the times where things get fucked up is twice as worse. So it's built into my orders. When I select my NQ mic 2 targets with trail stop configuration, it loads up six contracts for me. That's the contracts I'm comfortable with. It's about a half a mini, a little bit more. No DCA. No adding to losers. And that's something that I've had trouble with in the past. But it's been a lot easier with tighter stops. And knowing that if I fuck up a DCA, the account's gone. I blew an account that I traded for 30 fucking days one time in 15 minutes, DCAing a bad entry. And just imagine, like, look at this fucking trend. It's like, whoever, I wouldn't have thought that this shit would have happened this morning. Like, look at this. Boom, 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 boom. Just huge. It's dwarfing the entire price action from the past week. And if this trade didn't work out and started going against me, which it eventually did, I would have been DCAing into this fucking candle. There was absolutely no respite, and there hasn't been. So it would have been catastrophic. And the one thing that I do have down is that I'm not doing DCAs because I feel like I will take a stop. That's one thing that I think that I have down, is that my stops got tighter. Yes, I'm moving them a couple of times. I'm not moving them every time. The anxiety sometimes gets the best of me. Today it wasn't even that bad of a move. I just moved my stops up a little bit, and I really even had no scientific basis for it. I was just like, I can't handle it, because the candle was just like sitting there on my entry going pop, 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 pop. And it got the best of me. It was the last trade I needed to hit threshold. And a shameful failure, but luckily it worked out. But anyways, no DCA, so I'm done with DCA. I'm 90% profitable with what I'm doing right now. Obviously, the market goes through ups and downs and changes on you. If you've been watching the market more than 6 months, you know that the months between the months, things change. The price action changes, keeps you on your toes. I've been watching this thing for 3-4 years now, and I feel like I've run through the cycle where they're now using things I've seen before, and so now it's all like coming together. Like, oh yeah, I feel comfortable in almost all kinds of price action. No revenge trading. Waiting 10 minutes after a loss. Well, it's hard to put that one to the test when you don't lose. But I think if memory comes to serve me, there was a time where I took a loss on this latest run, and was pissed because I knew that I got stopped out for BS, and I wanted to enter in again, and I think I may have, and it turned out to be a good one. But that might be another rule to work on. And I have a tilt meter on my stream. You see that next to the session clock by the news ticker over by Huey on next to my face there. Like, see if I can. Come on. My stream is so fucking. It's backwards, so. hard to do it because it's a little lagged, and there's my tilt meter right where I'm pointing. Only took me 5 minutes, but there it is. So it's at 0 right now, but it's kind of rudimentary. There hasn't been a lot of focus on that feature, and I've always planned to have Huey talk about my tilt meter and start putting red warnings like the news warnings that I have. You are tilted. Back the fuck away. And it doesn't come up very often because I don't lose very often. But I could work on that a little bit better. And another cool thing that I just thought about, like maybe if the system detects that I move my stop, maybe this tilt meter will go through the roof or something. You know, might keep me straight. Pattern match setup, not FOMO. That is one thing that I've been really trying to focus on, and I think maybe it's kind of been the reason for this run. The thing that I gained most from my rules is this rule that says that you take the setups. You don't, because I have this problem where the setup appears and then I'm too scared to take it, and then it goes into my favor a little bit, and then I take it. And so you're like, the margin for error on these setups are very, very, very small. And if you're not taking the setup where it should be taken, then you're putting yourself at a disadvantage right off the bat. And with a 12-point stop, that's a no-go. It does not work with a 12-point stop. Because, I already want to move my stops because they're so fucking tight. So if you're entering in on the bottom of the candle that your setup was on when you should have been entering into the top, the most scariest part of it is like, what if it keeps going? Well, it's a fucking setup, you gotta take it. And I think that's where I've made a lot of improvement, is actually taking the setups that make sense. Taking the setups at the spot where they're at. Very specific price that I should be entering in it. And the reason why that I FOMO out of those or FOMO into those is because of that anxiety when I enter in and the price just goes crazy for a second and it sits there and does that quarter point back and forth doji red green thing for like 5-10 seconds before it moves again. And that anxious feeling is the reason why I pass up setups. It's the reason why I wait for it to go in my favor before I enter. It's the reason why I'd, it's just a bad idea. It doesn't work. When you take the setups, they work. When you wait on the setups, you get chopped out. On a 12-point stop, there's no margin for error, so you have to do it right. And I started to realize that, like I understand that issue. And so I've been taking my setups in a way that I haven't always. Like, for example, I think my trades were right on these the tops of these green candles here. There's 2 setups. Waited for the first one. And took the second one. if I had not been short here at the top of this range candle, I would have been short here. And there was exactly one chance to get out, exactly at break even, with a stop at least 2 or 3 times more than what you were prepared for. And that's the difference from taking the setup 10 points. It's a 10 points difference. The setup existed up here, and if I would have FOMO'd into it down here, I would have been lucky to make any money off of the drop. But instead, I got 4.5 points more on my runner. It didn't work out for a longer term move, obviously. But the margin for error is so extremely thin that if you're not taking the setups at the right spot, you're basically fucking yourself right from the get-go. So the FOMO problem has somewhat resolved itself, because I do understand that now. That you can make money in a setup that doesn't run, or you can be on the complete wrong side of the market, and taking the setup where they should be taken gives you an infinity more probability that you'll profit off of it. And taking a setup like that 10 points from where you should have puts you into the noise. It lumps you in with all the other losers. And I'm staying out of that. Risk reward, 2 to 1. Done. My Sierra charts keeps me on that path. And I'm not quite there. I'm just under 2 to 1, but my risk reward at 12 point stop is way better than what I used to, which is looking for these kinds of scalps but with a 35 point stop instead. So just think about that. Put one on the chart just so we can look at it. I think this is the setup I took. Just show my order fills real quick. Yeah. Here's the setup I took. Here's a 35 point stop. So, that's not good risk reward. When you're taking profit right here, and in this case, you might even be looking for something like this. But anyways, it's like backwards risk reward. The peaks of these are where you're taking profit. Okay, somewhere in here. It's like the best you can hope for, and it didn't even go that. So unfortunately, it means you got to have a 12 point stop. Tighter setup. So those are my rules. I walked you through them. I have 9 rules, and every trade I journal what I broke. Right now, I'm 88% of my rules are followed, which is basically all my rules being followed except one. Moving my stop, because it's so fucking scary to take that high break, you know, because it came up and it pulled back on the short-term chart. It was a pullback that was less than a minute. It's just 3 red candles, okay? And then it came back up and broke that high, and there's the setup right there. And at the very top, I barely faced any drawdown. And my profit targets were both within this second pullback. So that worked out. You know, eventually, we're going to get something like this. It just cruises to your profit target. And I told myself that I was going to back off my trailer a little bit because, you know, just the candle, the candle that you profit on has a tendency to just, like, you know, it's a big candle. It goes up, goes down in the candle, but, you know, it's usually in my favor. But just the fact of printing the candle, it will go back up, and my stop is just too tight. Goes to break even after the first take profit, and then the trailer is like just nut hugging the price, and you know, the noise takes me out, which in this case was good. But I'd rather be sitting at break even for a longer time, and then trail once it starts moving away from my entry, a little bit looser. And I was thinking about that last night, and I might do that today. But didn't do that. I haven't really finished thinking about it yet, but I was thinking about maybe coding some kind of stop management software that, like, basically anytime you have a stop on the board, this software will take over and be like, try to move your stop? Nope, we don't move stops. Trying to trail too tight? Nope, we're back at break even until 1 hour. You know, when you get 1 hour, then maybe move it a half hour. When it gets to 2 hour, maybe move it to 1 hour. You know, some kind of scheme that just handles the stops by itself. You know, I'm the one that enters. I'm the one that gets myself into a good position, and then the software takes over and manages my stops. I still have full control over the take profits. If I want to move my take profit all the way down to hell or whatever, that's up to me. But the stops are so critical that it's just like I would love to just take it out of my hands and code what my brain knows I should do, and forces me to do it. Because I know what I should do every single time. I know what I should do. You know, half the time you can barely even move your stop out of the way before you get stopped out. Or half the time I can't even move my take profit out of the way in time before it gets tagged. Certainly, it feels anxious when you know, prices going in my favor, and I'm like, I'm only asking for 20 points on my second take profit. I should be moving it to 40 points or something. Whatever, you know, makes sense. You know, like they didn't touch the orange line again after the breakout, and these entries usually will come back down to about this level. You know, like these entries, you would expect this stuff to get tagged before it took off in this massive trend, but not in this case. It just left all the EMAs right behind, left the orange line behind, which was down here at that time. Just like move the chart over a little bit and you can see the orange line be right where I wanted to take profit. See? This is the entry candle, and this is where you would expect to get tested on the downside. But it did not do that. So, you know, that's like a full trade, and it got completely left behind. So, ideas for the future. Like, I'm gonna take that stop management software off my computer. It's pissing me off. Can't move my stops anymore. You see yourself rationalizing not liking it after a while. Taking a little break here on the uptrend, just pulling back. It's a choppy little range on the top, downward inflected. We lost the orange line. We're trying to hold the blue line. It's just kind of the range bottom. On the longer term look, the range bottom is around 24,650. So if this thing falls out, which I think it might, because we're gonna have to have a pullback. There's a range in the middle of this this trend at about 750, which is where I took those entries. An entry right here, 50% ish. Untested wick, untested wick, untested wick. There's an untested one too, so it could find support at just under 900. And then we have 843. Then we have 791. And 745. You know, this could be a very supportive area. There's 3 wicks that can bounce off of. But I'd be fine with longs here. I mean, just hypothetically speaking, I have no idea what it's doing right now. But coming back down on the 9, this is 900 is where the BSL is, which we've been this whole structure on the top. From this level has been premium. So we're trying to fall back into the liquidity range. This is where the BSL is, and this is where the SSL is. Lo and behold, right on the fucking EMA. So we took the shorts. Liquidity was real tight, so been very rangy down here, and the shorts were right here and the longs were right here, and then this trend happened and it exploded right, just wait for it, started getting real squirrely, say right on this candle here. This is where all the volume showed up. this red candle. So these two candles right here are a lot of shorts added on there. And now we're back into that level, and the shorts are ready to get a pullback and start making some money. Because we're out of premium now, and we're getting a pullback. But it could bounce right here, and this level is a good one. 880, 881. Looks like it's losing 9. But it's probably just gonna wake up. You never know though. This price action has been pretty crazy. Like this dump and then pump, and, you know, just up and down action. You can see it. There's another one of these kind of trends. It's just like straight out of nowhere. It's like this nice angled downtrend and then boop, straight up. It's kind of what we've been seeing. Got normal looking price action and then straight up. So I think that's just because this is a bearish market. These bulls don't know how to trade in a bearish market. Somebody's profiting though. Yesterday's high, range high was 831. Could be a good target. There's a beautiful little wick to be tested there. It's just this little tiny 2 candle. Took less than a minute to print it, but hit a wick and took off again. So that could be a target for a short or a long, whatever, to wait for there. Another wick here right under this FEG, which I wonder where I drew that. That was on a month and 3 days ago. I drew this. October 16th. So before the all-time high got hit, I drew this level. And it's important. Still to this today, you can see there's a lot of shit going on here on that FEG. Try to hold up on it. What else we got? NWOGs. We held that last time-based liquidity on the Z contract. This is the lowest. I'm going to change it, actually, because I was just thinking about that this morning. It says the last time. Well, it's basically the lowest. Makes more sense. And I drew that all the way back at the very beginning of the Z contract. Go show you. All the way back. We'll skip it. But what I will do is tell you when I drew it. Oh. September 17th. So it was before it was heavily traded. basically. This before this contract was even heavily traded, so it's the very lowest one, and it hasn't printed one lower since. You know, the closest we got here is right here, midnight. Yeah, I'm sure there's one in between these, but this is the lowest, which has been a cool thing to do. I think I'm gonna. It's the first time I ever did that, and this level at 416.25 has come into play a few times. It's been a magnet. It's been a target. It's been a bounce, a launch point. Launched off of it again. It's only touched it like 2 or 3 times this entire contract. So I think I'm gonna get in the habit of that. It's pretty interesting. All right, well, they're pulling back. I think this NWAG is probably gonna be a good buy. It blew through that wick. But we're on the 50% of this little liquidity void that exists between 864 and 884. It's like, you can fill my entire fucking screen with FEGs, really. So, just pass on all of them. I usually do. I don't know what causes me to say, I'm going to draw that FEG, right? So I do, and then they always end up being somewhat, like, useful. So, like, why don't I draw this one? I don't know. Because the ones I have look good enough. Gives it a nice open space. There's some NWAGs in the middle, which makes total sense. NWAGs directly 50% of this. You know, that always just ends up happening. And that makes my mind right with it. I can see what's going on with that, because I know that the 50% level between 2 major structures is significant. Look how hard it ranged over this NWAG here. Let's go look at the 50% of these. There's another one. See? It's just like you don't even have to know. You could just say, I think I'm going to find something interesting right at the 50% of this. And sure enough, 50% of the range right there. Opening range low. Bunch of bounces. Just never fails. So, filling up your chart with random FEGs and going from there. That's pulling back pretty hard. Guess this, the bull run was huge, so fine. It's probably going to end up back in here somewhere. I mean, could. Especially with this price action. It's just like very violent upside moves just get retraced on fully. So sucks to be bullish. I think, part of the reason why I'm having such a great month is that the market has been bearish since the all-time high. And I am a bear, like, to my core. I'm still working on the longs, because, the whole time, pretty much, I've been trading, I should have had a bullish bias. And if I would have just looked into how to long better and suffered through all the pain that I suffered through trying to short a bull market, which is how I learned how to enter. And so now that we're in a bear market, when I do my bear thing, it's like what it would have been if I would have trained myself to be a bull during the run to, God knows where. So I got one side handled when it's aligned with a market regime or a bias. Those just work. So another weakness of my trading that I'm looking forward to is working on my bias and working on the long side. I think that'll be cool. And working on recognizing whether or not you should be shorting or longing. And I guess it's kind of a rangy market, but I think that's kind of the hallmark of a bull market, because the bulls it takes them a while to get the memo. And this still could be very bullish, but V-shaped recoveries that just like fail like that. What an odd structure to see. So V-shape with kind of a half-ass trend and then a full retracement of a V-shape. No, I'm not used to that. That is a pattern that does not compute. And I think it's because the market's bearish. That's my theory. And look at this. Straight up, straight down. I'm giving long advice here like I know what I'm talking about. But I don't. Because this is a bearish market, I think. And I was never a long-sided trader. I'm a short-side guy. Definitely been stuck in these things that won't bounce. You're just like, what do you mean it's not bouncing? Bounces a little bit and then goes down to the next level. Bounces a little bit, goes down to the next level. It just never stops until you cut it loose or you get liquidated. On that candle, you're like, all right, this is it. Can't go down 5 more points. If it goes down 5 more points, I'll get liquidated. And then you're just like, it bounces a little bit, and you're like, all right. And then, boop, one little wick, boop, liquidated. Every single time I've been liquidated, it's just been like this little boop. You get right there, and you're like, I'm about to get liquidated. And you're watching, and you're like, oh my God, it looks like it might bounce. Boop, liquidation. It sucks. Boy, oh boy. 3 trades this week. That's crazy. Think about where I cut my teeth trading 200 and 300 contracts a day, making a full day's wage on, let's see how many seconds that trade was, 15 seconds. Pretty cool. Actually, that was 1 minute and 1 second. That's actually my longest trade in a while. Since the 13th, all of my trades have been under a minute, and I don't have any data handy before that, because that's when my journals started automatically tracking my trades, which hopefully I'll be able to show by the end of the week here. I've been having so much fun using it that I haven't had the opportunity to show it to the stream yet. So I have to get here a little bit early. Remember, I have to set up a new source on my streaming software. We're coming into our level that we shorted. It's almost exactly the same place. And think about that too, is that the EMA is where the shorts were trapped. Okay? That's the way I think about the market. You put an EMA on your chart, it is where the other side of the market is trapped. And then you think about what I did. You think about shorting this here, and two runs of shorts that got the chance to enter here, and then the market took off and trapped them. There was no respite, not a single bit of it. DCA, count below. So look at when price comes back, the EMA is at the exact level where all these shorts entered. So think about the people who didn't take profit, like I did, and let it go. Well, here they are. So after this move, are we going to get a big reaction of shorts letting go of their shorts? Because they're like, finally we got the break even. We had to sit through this hellish pain. I'm not sure, but that's the reaction that you want to look for. When it gets back to this level, are the shorts covering, and the longs still buying, or were the shorts that were here actually the institutional smart money, and we're like, all right, well, fuck it. We know this is going to happen every time the banks enter. The fucking market goes against them for the longest time. Gather up all these extra shorts all the way up, and then it's too heavy to bounce. What a dumb looking pattern though. Like, this 5-minute chart looks ridiculous. If the bulls bounce this here, ugh, what an ugly ass chart. So that's what it makes me think that this is a shortable level again. Because when have you ever seen a fucking McDonald's arches on the chart like that? That would look totally asinine. And it just makes me feel like it's still this is not where the bulls are going to bounce. They could bounce it, test the 9 from the downside, which they will eventually. But this could be Doom City here. Very capable of it. Especially since the top didn't hold it at all. Like, this has been a complete failure. The bulls ran it up, and this is where this the smart money could have been loading up on this shit right here. Like, yeah, buy more, buy more, buy more. Please do. Buy it up. We'll sell the fuck out of it. And then all of their positions are all up in here. Stops here. Ready to start profiting. But I'm kind of detached from the market right now, so do not take my word as gold. right now, because I've been talking about personal stuff for a while, and I'm kind of flummoxed and confused by this up-down move. Looks ugly to my eye. I like beautiful charts. I'm a chartist. I'm a chartist at heart. And you're on your own. BTC 89. Holy crap. Are you with me, Catherine? Did you happen to see Pax's retweet the other day about Bitcoin? All right, I'll read it. It's pretty interesting. All right, so listen up. The reason nobody's sure why BTC is pulling back is because everyone is looking for a single cause when this is actually a system failure with multiple transmission mechanisms reinforcing each other. Here's what actually happened mechanicalistically. Bitcoin ran from 40,000 to 126 in less than a year on a very specific narrative. The Federal Reserve easing cycle pulls institutional adoption through ETFs equals sustained bull market, right? Market built up $94 billion in futures open interest, with some platforms offering leverage ratios as high as 1,001. That setup alone created extraordinary fragility. The trigger was simple but devastating. Fed officials reversed dovish expectations completely. The market went from pricing in a 90% probability of December rate cuts to 40%. Real yields on short-term treasuries stayed elevated above 5%. The entire macro story that justified Bitcoin at 126 collapsed in a matter of weeks. Now here's where the structural vulnerability shows up. The new ETF infrastructure that everybody celebrated as bringing institutional money actually created institutional scale cell liquidity that never existed before. Does that make sense? When the macro narrative broke, institutions could exit with one click. We saw 1.1 billion in ETF outflows in just days. This isn't retail panic selling. This is professional portfolio managers rebalancing away from an asset whose fundamental thesis just evaporated. Simultaneously, long-term holders who bought Bitcoin between 40 and 80 started distributing. They offloaded 815,000 Bitcoin in 30 days. These holders aren't selling because they think Bitcoin is worthless. They're selling because they see volatility ahead and they're sitting on 50 to 150% profits. Smart money doesn't ride drawdowns when they can step aside and rebuy lower with the same capital. Here's where it becomes a cascade. When price broke the 100,000 support level, technical stops triggered across the entire derivatives complex. Over 20 billion in leveraged positions got liquidated throughout October and November. Some single day events saw 3.2 billion wiped out. The liquidations themselves created additional selling pressure, which triggered more stops, which forced more liquidations. Open interest collapsed from 94 billion to 68 billion. But there's still probably more leverage that needs to clear. The critical insight everyone is missing is that there are no natural buyers at these price levels. Institutions are rebalancing away from this risky asset. Long-term holders are waiting for lower prices to rebuy. Retail got scared off by the violence. The new buyers won't step in until the leverage finally gets fully flushed and the price stabilizes. So if the market has to fall far enough to accomplish three things: clear the remaining leverage completely, reach prices where long-term holders stop distributing and start accumulating, and then find the level where the actual value buyers with real capital see opportunity worth the volatility. The 600 billion wipeout you're seeing is mostly the evaporation of unrealized gains that were paper wealth to begin with. Ouch. When Bitcoin went from 40 to 126, that represented about 1.7 trillion added to the market cap, and a lot of that was pure multiple expansion based on a macro narrative that turned out to be wrong. Now the market is repricing based on reality. High real yields, no Fed easing, strong dollar. This isn't mysterious, it's textbook deleveraging dynamics in an asset with no cash flows to anchor valuation. Extreme leverage ratios and a macro thesis that broke. A 25% correction after a 215% rally with 1,000 times leverage in the system is actually normal market behavior when the fundamental story changes. The violence of the move reflects the amount of leverage that was built up, not any change in Bitcoin's long-term prospects. The real question is, why did this happen? The real question is what price level actually clears the market and brings the genuine buyers in rather than leveraged speculators. Still being discovered. Yeah, it doesn't paint a pretty picture, does it? Oh, nice. I didn't know that. It's just as well. Nothing but doom and gloom mostly anyways. The Twitter algorithm basically shows you everything that you hate, or shows you everything that you love to hate, essentially, is what it is. So, not really a value add to life. But it's an interesting narrative. I really appreciated that. It makes total sense. It's like it spelled out something that I felt for the longest time, but couldn't really put it into words because I'm not that financially literate. But that really does make sense. Yeah, exactly. It was the thing that everybody was pumped about is actually the thing that is nailing it right now. Oh yeah, didn't even notice. That is very interesting. Putting it together even more there with that comment. Yeah, because like the bottom line is that um, people like me who are like, I'm not fucking buying an asset that's 126,000. I've been priced out of that market. No way. There's no fucking way that I would think that was a good deal as a regular person. So that leaves it open to such a downside thesis. As soon as there is a real downside thesis, there's nothing there because nobody's willing to buy those prices except people trying to speculate and people hoping and dreaming. So all the people who are paper millionaires or long-term holders, they're just fine where they're at. You got no motivation to buy at the top. I can count on my hands more. Like, have you ever seen somebody add into strength? They're out there for sure. but that's kind of institutional level um, trading styles. You know, it's definitely something I would love to do someday. Be able to trade like that, but I'm not there yet, and I've been doing this for a long fucking time. I'm pulling off scraps. So definitely not comfortable doing that. But there are some people, I guess, but not regular traders, not fucking jokers who are like, "Oh, I'm up $1 million on Pengu." They think they're big shots, but the market will punch you in the face, as we've been seeing. It the 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 leveraged um, positions have got to be wiped out. That's what the market is saying now. And those people don't have the skills to survive. So like as it comes down, you're thinking, finally, maybe we'll see a reasonable price. Maybe we'll see 20,000. Maybe we'll see 1,600. Like that's what normal people think about. It's pretty interesting. And when it does find that price, it's the most annoying thing. It's like like XRP sitting at 20 cents for what seemed like years, and then sitting at 50 cents for what seemed like years. It's like when you actually find a level where people are willing to buy, the shit takes for fucking ever to go pop off. And you know, it's a tough deal. It's hard to trade. But that's why I'm a scalper. You know, sitting in the range of 3 year range, a tight range for a long term play at the all time high or whatever. That's not how you can make money. You have to scalp it. You have to sell at 50 cents when it goes from 20 to 50. It's the exact same thing I do on the NQ. Unless you're willing to enter in and sit there and hold and take your drawdown, and being in that area of the chart where the long term buyers have been found is not fun and not profitable for a long time. What else we got here? Pole. The fuck is pole? You know pole? POL. Absolute murder bots. You're cooking legends? I'm cooking legends? Huey. Make me blush on stream, bro. Someday he's gonna respond to me. Polygon. Doge is down to 15 fucking cents. Oh my god. BTC 89. Ooh. So now that the bull run is kind of switched a little bit, do you think should I take the market pulse section down? Yeah, well, same for ETH, right? Yeah. What's Sol at? Who did? I thought ETH hit 5,000 or something. Just looking the other day, I thought I saw 5,000. Shout out to all the viewers here. I appreciate a like or a subscribe. Come on back. We usually take a nice scalp off the first 15 minutes of market, and we're done for the day. Learn a lot. 134. Oh, there it is. Yowza. Oh. 49.53. Just about 3 hours to the FOMC meeting minutes. Huh. I was reading it on my phone yesterday morning, so just kind of guesstimated the levels, I guess. I thought I hit 5,000. Like the stream. Do 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 do. Maybe I'll go viral for my 22 win streak. Wouldn't that be cool? Hey bro, you gotta check out the streamer. He's on a 22 win streak. Tomorrow I get like 4,000 viewers. $500 trade this morning. Woo-hoo. I've only taken 3 trades this week, and I'm on a 22 win streak. Oh, that's not true. 3 winning trades. I took a break even. One break even, and I took 2 profitable trades yesterday. First one was just for $30, and the second one was 400. Oh, that's 2 days ago, Monday. Yesterday I only took one trade for 450. Got a little bit more extra on my runner today, which I was real thankful for. I'm gonna start dialing in that runner. Gosh, that's gonna be great. Extra $80 per trade. Oh God, that would be so amazing. Do 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 do. My journal show payout buttons got a green number in it now. I'll put a little sprint in today and get this thing ready for the stream tomorrow. I think that's really gonna kick up my stream to another level. So there's not anybody that journals their trades on stream, and I think that could be a nice differentiator out there. Because it seems like I'm not sure if there's any legitimate traders on YouTube, professional traders. They're winning traders on YouTube, but it seems pretty degenerate out there across the board. And I guess some of the most famous and winning traders on YouTube are just kind of good traders, and they don't have a problem with their psychology, and they don't need to do that stuff. They don't have a problem. They're like, well, I'll set my stop here, and they're already loaded, so they don't care if they get stopped out. But they make good trades anyways. Like, for example, Tanya or whatever. You rarely hear about significant setbacks or screw jobs or losses by any of them. They just have it all put together already. And on this stream, you're watching the very beginning stages of a professional transformation, and I still have a lot of work to do, and a lot of bits of the process that are important that most people don't get to see, like journaling your trades. I worked really hard on a really cool trade journal product that I've been building over the past week, and I've been using it for a while, and it's fucking awesome. I can't wait to show it off. And it really helped me. And the more data that goes into it, the better trader, the more in control of my psychology trader I will be. It's less about numbers and win rates and all these factors that your trading software automatically pretty much handles for you, but more about how you felt and what it looked like and how convicted you were, and what were the correlating lines, factors that caused you to enter. Would you take it again? Reflect in your own words on what was occurring. Did you take the first impulse or the second impulse? How many rules did you break? Those are the true things to capture about your trading. The things that make the biggest difference. You bring up the Sierra chart's built-in statistics, and you're like, wow, I made $1,400 on short trades this month. Cool. Well, I must be a good short side trader. Wow. My average time in trades is 4 minutes and 22 seconds. Ooh, how interesting. It's kind of crazy though, because my average time in since I've had the journal, let's go through it real quick. Today's trade was the longest trade I've had since I started my journal. Today's short at 8:45 and 45 seconds was 1 minute and 1 second. Yesterday's at 8:36 was 15 seconds. Mondays at 10:05 was 54 seconds, second longest trade. Friday, no, I took 3 trades on Monday. I took a short at 9:56.39, 6 seconds. Monday 9:30, 13, 26 seconds. Friday 8:37, 10 seconds, 26 seconds. And Thursday of last week at 8:32.26 was 17 seconds. So there's a lot of change with the journal. I think has already produced a lot of change in my trading. You know, because I'm looking at my stats with all of the trades, not just the last week of trades in my journal. And my average time in trades is 4 minutes and 22 seconds. And, you know, it was probably way higher than the past week of trading has brought that average down probably drastically. Since I barely even scratched 1 minute in a trade in an entire week. And, you know, it's pretty interesting. Average time in winning trades, 2 minutes. Average time in losing trades, 12 minutes. It's obvious. So you look at your overall stats and you look at the trading in the last week, and you can see it obviously in your journal. The duration has been a minute or less. And then you look at Sierra Chart's trade log, and it shows you that your average time in winning trades is 2 minutes, and your average time in losing trades is 12 minutes. Well, that is actionable intelligence, because the trade log has way more trades in it than my journal does. And it shows me that I've been winning my balls off with trades under a minute. Sierra Charts tells me my average time for winning trades is 2 minutes. So, you know, that's right in the middle between 0 seconds and 2 minutes, 1 minute. That's what I've been doing. And my average time in losing trades is 12 minutes. So, you know, it's brain dead simple. As soon as 2 minutes hits, you have to be thinking, it's time to cut this shit. My edge says, as soon as the trade starts going over 2 minutes, you're probably going to lose. It's so obvious it hurts. And you know, that's the kind of trading and psychology benefits that I've been getting from journaling, which has been a new thing. I haven't journaled, but basically because you know, the software that I have grown to love and built my career around doesn't allow me to journal the way that I want to. And all the software packages out there cost like $100 a month. You know, for somebody trying to make it in trading, I'm not spending $100 on some SaaS software that doesn't give a shit about me and doesn't have support and whatever. So I built one by myself, exactly what I needed, and you know, Sierra Charts does everything automatically now because I programmed it to do that. But it didn't come out of the box like that. I had to go out and do it. Now I got a software package that I really love. I'm done with 4 sprints, and I have like 16 planned. So there's a lot more work to be done. And after 4 sprints on this journal, I'm loving it. All right, well, I had a good day. Hope you did too. Please like the stream before you leave. Oh, Catherine the Great's gone again. It never fails. As soon as I'm ready to end the stream, call it a day. She's bourbon. Please like my stream. I really appreciate it. I'm a small streamer. I trade New York Open because that's how I make my living. But I understand that I'm facing a lot of headwinds on the streaming game. That's cool too. I'm in it for the long term, anyways. I've spent 3 years, 4 years becoming consistently profitable, and probably gonna have to do the same thing for streaming. So, but I would appreciate a subscribe. I would appreciate a like. Give it. Thank you. We'll see you tomorrow. 8:30 Central, 9:30 Eastern for New York Open. We'll take another 30-second winner. Thanks, baby.